Okay, good morning, everyone. I'd like to welcome you all to the Daily Energy Markets podcast. I'm delighted today to be joined by Victor Yang, Senior Analyst, JLC Network Technology in China, Ihsan Al-Haq, Senior Oil Analyst at Petroleum Economist, and Bill Spindle, Independent Geopolitics and Energy Analyst. Great to have you with us, gentlemen. Ihsan, perhaps I can start by going to you. We have a few headlines today on our bulletin. One is that OPEC Plus won't pivot until oil prices fall further. And of course, we've seen oil prices relatively stable really in the last few weeks, you know, up and down on certain headlines, but really holding pretty steady considering the economic sort of uncertainty that surrounds us globally. Where would you see the trajectory for the rest of the fourth quarter for prices and why? Should we expect things to remain more or less the same?
I think it will depend on supply. If OPEC continues to increase supply, then supply will exceed demand, which will result in stocks building, and the market could even then flip to contango, and that would put pressure on some OPEC members, especially with large social programs. Even in Saudi Arabia, I mean, the country is spending a lot of money on big projects, and they have to finance this. And at some time, if prices fall below $60 per barrel, the pain will be too much. And then they have to do something. I mean, it might continue for a couple of weeks or months, but in the end, they have to decide what to do in order to keep prices at reasonable levels, as OPEC often says.
Okay, Bill, I mean, would you agree with that? I mean, obviously the demand is the big question mark, isn't it? And we've, China, a big factor within that as well. It's been buying a lot of oil for storage recently and probably helping keep things where they are. But there's this argument now of, well, at the moment we've got tight supply, but then next year, oh my God, this glut that everyone's been talking about is actually going to manifest. Let's look a bit further into the first quarter next year, perhaps, Bill, and see whether we'll continue to see what we're seeing today, or do you think that those realities will kick in?
No, I think we'll probably continue to see a pretty hefty supply side and pretty sluggish demand is my guess. And in the U.S. here, we'll start to get into midterm election season. Donald Trump will be rallying for lower oil prices as we go into the fall. So I kind of see these dynamics continuing in through the first quarter at least, and maybe even beyond.
I mean, rallying for lower oil prices and yet strengthening the sanctions on Russia and Russian oil. Of course, we've seen, quite a couple of, quite significant headlines finally on the back of sanctions on Russia. Lukoil looking to sell its assets. If that's not immediate sort of manifestation of pressure from Russia, I don't know what is. I mean, Bill, just staying with you on that front, do you think the recent sort of pressure on Russia is anything different from what we've seen from the US, the back and forth pressure on Putin, if you like? Is the market paying more attention?
Yeah, I think it is substantially different because it does provide a lever that could be pulled more. I think it will cause some disruption in the short term. I think you're going to see India cut back a bit on some of its purchases. But I still think it's more of a potential lever than a real big shock to the system. You can see the market's not moving as if
Yeah.
millions of barrels are suddenly going to come off, and I don't think they are. I think you're going to see a readjustment, and then I think Donald Trump sees this as a kind of lever that he can continue to pull, but whether he will, historically, that's really not what's happened.
Okay, Victor, let's go to you in China. Talking about sort of Russian oil. Let's stick to that for now. Chinese intake of Russian oil. We know you're buying all of the Iranian oil that's out there in the market. But what about, of course, China is also a Russian oil importer. And, would China have any concerns about stronger sanctions, or you have plenty of supply from elsewhere? It's not a problem. And what is the forecast outlook for the fourth quarter in terms of imports? Because we've seen those continue to strengthen in the beginning of this quarter.
Yes. Well, actually, some companies, Chinese companies, had cut their crude import recently because of some issues with logistics and so on. And we are seeing a drop in their imports in the last quarter. And some companies still working to, are still working to find other ways to continue with such imports, but it will take some time. So for the coming 2 months, we expect a drop in the country's crude import.
But we saw, I mean, one figure I saw yesterday was that October imports are up on September so far by more than 500,000 barrels a day.
Well, for October, the imports were not impacted that much yet. But
Okay.
in October, more companies were sanctioned, including some state-owned ones, and impacts actually became bigger. So we are expecting bigger impacts for the last 2 months of the year. And including exports now, Chinese companies had planned to cut their export in in November already.
The product exports.
Yes.
Yeah. And is that that was planned, pre-planned, as in terms of the quotas being known already there, or has there been some dynamics there that weren't expected?
Well, it's still slightly below the quota for November because, well, based on the quotas, their exports in the last 2 months could be basically flat with the average in the first 8 months. But now, based on the plans we learned, they will be much lower than in September or October.
Okay, thanks. Thanks, Victor. Ihsan, let's talk a little bit about, I mean, you mentioned the Indian sort of oil intake. India, also, I mean, everyone's part of these trade negotiations, aren't they? I mean, is ongoing. India's negotiating with the US, every country is. And perhaps it's difficult for them to do so with the changes that are coming out of the US in policy and direction. But India always saying, "Oh, we're going to take whatever oil we can get at the cheapest price possible," whether that's Russian oil or rather the Russian oil, of course, advantage has decreased as oil prices in general have dropped. But where would you say India's stance is also towards the US in terms of trade negotiations versus abiding by what Trump is asking it to do in terms of taking less Russian oil going forward? We haven't really seen that pressure, have we yet?
I think India will also be looking at China, how China reacts. The problem is that you can do ship-to-ship transfer for Iranian and Venezuelan oil in Malaysia, but the Russian volumes are too high and it's not easy. And on the other hand, Putin is an ex-KGB man, and he knows some intricacies of these things. So I think they will find a way out. But in the short run, I mean, probably there will be less oil coming to India and China, but I mean, some oil will continue to be exported to India. And I think now even there is some pressure on Hungary, for example. Hungary's Orban will be meeting President Trump. And the problem with Hungary is that it's a landlocked country, and they can get oil from Trieste via the Trans-Adriatic pipeline, but MOL has the Hungarian oil company has always said that there is not enough supply available, and there have been some disagreement with the Croatian pipeline operator Janaf, because they say that Janaf is unable to deliver, and Janaf has always denied that. I mean, there is a possibility, but I mean, Orban has a good relationship with Putin, and I think he will continue to have that relationship. But I mean, on the other hand, Orban is a good friend of President Trump, so he should find a way which is somewhere in the middle. And
well,
it will depend.
Good luck to him. Yes, I mean, of course, Orban is Putin's only ally, perhaps, in Europe at the moment, and vice versa. So hard to see them, giving up that bromance. But of course, there are always middle grounds to be found. Thanks, Ihsan. Bill, let's talk a bit about the US down south. A lot of activity in the Caribbean, war games, vessels and naval buildups happening around there. Now, we've got a headline today saying Venezuela might be canceling energy agreements with Trinidad because of warships, because it's hosting US warships. And we just saw Javier Milei in Argentina sort of win. A lot of dynamics happening in South America. What is President Trump's, do you think, real intention here? I mean, it's not just let's stop drugs coming into the United States. How much of this is an oil story for the US?
Well, I think it's a Maduro story for the U.S., or at least for the Trump administration in particular. They're trying to poke and poke and poke and hopes that something will give there, and Maduro will be out of office. Would they go as far as some sort of an actual attack on Venezuela itself? I don't. Well, let's not predict anything that Trump's going to do, right? But I think that's what it's really about. It certainly has nothing to do with drug flows. The fentanyl's the problem, and fentanyl's not coming from Venezuela.
Okay, so I mean, and deposing Maduro is because they want more control of the energy that's coming out of Venezuela going forward. I mean, what is there that sort of incentive, or is it just, oh, we don't want this guy in office?
I think it's pretty much we don't want this guy in office. We tried to get him out of office the last time around, he's a problematic leader. He certainly lost an election. He's not it's not as if the issue itself is necessarily wrong to try to get him out of office. It's just the methods are pretty risky, let's say.
Okay, Victor, I mean, back to China and the economy looking forward into next year. Where are we with the stimulus on China's economy? It's obviously had a great year, well, more or less in terms of the stock market recovering. A lot of people saying it's not going to hit that 5% growth though this year. A lot of, one or two economists, 3.5. Of course, we have to hear officially from China at some point. But what is the sentiment there as we come to the close of the year and the outlook for next year, and what plans that the government might have to sort of stimulate things further?
Well, when we look at the growth in the past quarter, in the third quarter, it was 4.8%, slowing down below the 5% target for the 2025. But when we look at the targets for the whole year, 5%, we still expect the country to achieve this target, even if the last quarter the growth is, say, below 5%, say 4.8 or so. And for the government stimulus, well, the country actually rolled out quite a few stimulus early this year. And some of them are still expected to play a role in the coming months. So we do not expect more stimulus in the coming months yet. And as the government said at a conference in July, well, the policies that we rolled out in the first few months of the year are still playing an important role, and they will continue to do so in the coming months. So for them, this is considered sufficient for the time being to give a boost to the economy.
And what about the China-US trade talks? Is that giving a boost or a negative tilt to economic sentiment? I mean, we've had different headlines, of course, over the year, but where are we at today?
Well, when we look at the statement,
last month, the headlines coming out of every Chinese official were, we will not bend to any forced demands from the US. What are we meant to believe?
Well, when we look at the statements from Li Chenggang, China's representative for the negotiation, and he said that both countries reach preliminary consensus on certain issues, and they discuss such issues as the US 301 section against Chinese shipbuilding and maritime logistics, and the extension of further suspension of the reciprocal tariff, expanding trade between the two countries, export control, and so on. So the next step would be for them to further to determine the details and go through the procedures for the approval, respectively in the countries. And we see that at least both countries try to avoid the escalation of the trade tensions. For instance, the United States said the 100% threatened tariff was off the table. And both sides at least saw that they are going to work together to at least fix some of the issues, at least temporarily. So this is kind of positive sentiment in China too. And we expect at least say the further extension of the tariff. So we hope things will improve in the near term.
So, Bill, just back to you on that from the US perspective, temporary solutions, again, we're not seeing, threats, but maybe not carried out. What is the sentiment in the US? We're approaching the Christmas season, a lot of imports from China for like presents and the whole sort of, I didn't ask Victor about the PMIs in China in terms of exports there of manufactured goods and consumer goods. But Bill, what is the sentiment in the Q4 in the US now? Stock market's still doing well. You're seeing everything. The dollar has even improved in the last week or two. Has the tariff issue impacted businesses or not in terms of cost and passing that on?
It's certainly impacting businesses in terms of creating a certain amount of kind of base level of uncertainty has gone up significantly, and that's likely to be a more or less permanent situation. And then just how much uncertainty is there kind of goes up, it goes down. Right now, it's receded somewhat in the last few weeks with Milei kind of pulling through this election, with the Japanese kind of settling on a new prime minister for now, with the China trade tensions kind of going back into a sort of ceasefire mode. But none of these things are really ultimately settled. So this baseline of uncertainty is going to continue, and you're just going to kind of vacillate up and down off that baseline, I think, especially as we get into kind of the next election year. Domestically, we're in a government shutdown here, which isn't nearly as dramatic as it seems, but it's also a situation that does have to be dealt with at some point. And right now, neither side is dealing with it.
Okay, Hassan, back to OPEC. Let's talk a bit about internal dynamics there. Yes, we've seen what they've been doing with volumes, and as you were referencing earlier, that, but if the price goes below 60, countries like Saudi, all countries will be under pressure, but Saudi has big budgets, big expenditure plans. But this whole question of baselines being renegotiated for next year and into next year, that's going to be really the thing. Are we seeing much discussion about that? Do you expect any major changes, bringing reality into context of what countries can and can't produce, spare capacity, etc.? Do you see that sort of coming to the top of the meeting list, if you like, next time OPEC meets?
Probably not this meeting, but they are already talking about it. And there are two groups within OPEC, haves and have-nots. Because, if you look at how OPEC production has been increasing, there are three countries which have been increasing production: Saudi Arabia, the UAE, and Iraq. And Iraq this week said that their production capacity has risen to 5.5 million barrels per day. So as a result, they are all trying their best to get higher quotas when OPEC starts cutting production again. And what we also saw, for example, in Nigeria was able to increase production, but what we saw afterwards was that they were unable to sustain that capacity, and their production fell down last month once again. So I think they are all preparing themselves for the period when prices stop increasing. Russia, they cannot do much about drones, and if drones continue to limit their production, then it's bad for Russia. it also means that Russia will not be able to increase production, and also the lack of Western know-how is having some impact on Russian production. So I think within OPEC Plus group, probably they might be able to increase 100,000, 200,000 barrels per day. And within OPEC, it's the Saudi Arabia, the UAE, and Iraq. But everybody is now talking about spare capacity, which has become a hot topic once if they continue to increase production.
Of course, and that is in the immediate sense, perhaps a little bit tight. Victor, sorry, I just saw the survey question. Let's look at that. How will Russian oil exports in 2026 compare to 2025? Okay, so like, are these new measures or recent increased sanctions going to trickle through to actual exports? Will we see more, less, or about the same? Victor, what about Iranian oil exports into China? China is really the life lease, if you like, for Iranian exports at the moment. No one else, not very few others are taking it. Has that all remained steady? Does China felt a little bit more pressure again from rhetoric from the US on Iran? Where does the country stand on that?
Well, such cargoes are mainly taken by independents, private refiners, and they have been more cautious over the past few weeks because of strengthening sanctions. And there are some issues with logistics, with payment, and some of them have cut their imports of such cargoes temporarily. It depends on how long they will keep such imports low. But over the longer term, it also depends on the sanctions, how long they would last and how they will work out too. For independents, it's very tricky, it's very difficult because their cost will be much higher if they buy non-sanctioned barrels. And the profit is not good at the moment, as you see. So some of them will still continue.
Yeah, has the payment issue in terms of, has that become increasingly more difficult, or it's just always been, tricky, obviously, but people get around it? Have you noticed any change in that?
Well, it has been tricky over at least for a couple of years, I would say. But sometimes, it can become more difficult for some companies as more companies have been sanctioned. So that has kind of impacted the overall imports of such barrels. But because of the profit, the discount, some will continue, I think, in the near term too.
Okay. Bill, we have a bulletin headline today about US pump prices that they could soon spike after fresh sanctions on Russian oil. Prices at the pump don't seem to have been a huge concern this year, despite the sanctions talk. And then, of course, on the other side, you have Trump saying, drill, baby, drill. And that. So where are we with US production? I heard a figure of 13.5 million as an update yesterday, and versus a more sort of bullish impact on pump prices potentially because of the geopolitics, if you like, activity.
Yeah, well, pump prices will become an issue next year as we get into the election. That is for sure. Along with electricity prices, energy prices are going to be a major plank of this upcoming midterm election cycle for sure. So I assume Trump will start focusing on that. That doesn't mean U.S. production's going to go up by any means, because probably the fastest way to drive down U.S. pump prices is to continue to allow OPEC and OPEC Plus to pump away as much as they would like to or can, as Hassan was pointing out.
Absolutely. Ehsan, what about non-OPEC? US is one of those, of course, but let's look at the other non-OPEC producers in South America, for example, and elsewhere. What is OPEC's view on that these days, in terms of managing the market and predicting what they need to be doing? Any concerns there? Has that dynamic shifted? Is it expected to shift?
I think at present, OPEC is still okay in spite of Brazil, Guyana, Canada, the US, all increasing production. But if prices start falling, then it will become a concern for OPEC. And I think also, I mean, things have been changing in the Americas. I mean, now once again, tariffs against Canada is an issue. Whether that will have impact on Canadian oil coming to the US, I think so far there has been no change in that, but it could become an issue. And then some circles in Canada are very hawkish, and we have to look at them. And now we saw that Brazil is having some contact with President Trump, and they might find a way, uh, which is good for Brazil, because otherwise their economy would have been impacted. And I mean, now what we are also seeing in Venezuela, whether there will be a regime change, it's difficult to say at present. So things could change very quickly. And if there is a regime change, whether it will result in higher production from Venezuela. But production increases this year, they have not been a concern for OPEC until now. But
Yeah.
if prices start falling, it will be a big issue for OPEC, I think.
Of course, and of course, if demand dynamics change as well. Victor, just going back to you, we have a headline today about China leads world's underground gas storage buildup. Can you tell us? I don't know if you're familiar with that, but in terms of China's gas security and expanding seemingly its storage there, it's obviously expanding its crude oil inventories. But what about gas, and how much of a sort of priority is that?
Well, China has been building underground storage for gas over the past years. And before winter, the country builds up a lot of gas for heating, which can last for 5 to 6 months in some regions, such as in Northeast China. So the country consumes a lot of gas in winter, and it needs to build up stockpiles before winter. And a lot is from import, some is from domestic production, but import are still growing every year because of growing demand amid the country's green transition. So more tanks, underground storage are still being built every year. Yes.
Okay, so that's just more of the same, really. I mean, Bill, back to you perhaps just to wrap up. We haven't mentioned Europe. I mean, Victor just mentioned transition. I know that is one of your babies, if you like, as well, in terms of specialties. But Europe, I mean, we haven't. We're not hearing much from there. We've got, Europe and LNG, its intake of LNG from the US, with the Russia dynamics being what they are, not changing anytime soon from a gas point of view. Have the patterns that we've seen settle in there for Europe secure its gas, if you like? That's pretty much set in stone, isn't it? I mean, whether we see a ceasefire or not with Ukraine, we don't see any change in those dynamics going forward.
No, I think Russia's or Europe is going to continue to try to reduce its purchases from Russia. That probably those will mostly be replaced by U.S. LNG. But longer term, I think the Europeans have still continued to get the message, as many others have, that longer term relying on imports of energy is risky, and you would try to reduce that to the extent you can figure out how to do it within the budget's constraints you've got. And that's kind of the path there and others are trying to pursue. That's a tricky path in Europe for the moment, and they've it's a lot of work at the moment, but I don't think their longer term goals have changed much.
Yeah, I mean, tricky path, of course, budget-wise, a lot of that going to defense at the moment, increasingly so. And I mean, would you say this year we've seen any backtracking on transition commitments in Europe, or it's just ticking along nicely, but perhaps a little bit slower?
I think there's a bit of resetting, particularly in public and in rhetoric, to kind of align a little better with what the Trump administration would like to see. I'm not sure how much that really means big changes beneath the surface over a decade or 2 decade long view.
One more question for you, Bill, before we wrap up. That we had another one saying that Trump doesn't rule out seeking a third term. We have a headline there, but he won't use the VP loophole. I mean, is that in any way practically viable?
Let's see how we get through the next midterm and how the MAGA movement and the Republican side manages to get through this next midterm cycle, and then I think we'll know more about where we're headed after that.
Okay, well, thanks so much, Bill, and to Ihsan and Victor for joining us today. There's our result at the moment, at least from our current audience. How will they compare? We'll have less Russian oil exports next year. Let's see if that materializes. Thanks so much, gentlemen. Have a great day and week ahead.
Thank you.
Thank
All the
you.
best.
Bye-bye. Bye-bye.